Welcome to my channel, guys. My name is Hank and I'm a real estate investor. And today we would like to talk about the top reasons investing in real estate. And I'm a bit biased because I'm very into investing in real estate. So yeah, but I'll explain to you why real estate is one of the best investment even during this time. So let's not waste any time. Let's dive into it, okay? Well, the first reason is, well, there are several reasons, of course. There's a cash flow, there's a appreciations, there's a principal pay down, there's a tax benefits, and there also the passive income or maybe semi-passive income. It depends on how you want to handle this. But let's talk about the cash flow. This is one of my favorite one is the cash flow. I have several rental properties that I acquired throughout the years. And the best part of it is like they are making me a positive cash flow where I collect hundred and thousand of dollars every month. So positive cash flow is the biggest thing actually in real estate. There's almost like the number one rule for me is like you got to have the positive cash flow, right? That's the first one first. The property has to make a positive cash flow every month. Like what is the cash flow? What is your cash flow? Do you get your cash flow? Your positive cash flow is actually coming from, having the rental income that you got every month minus the mortgage, the tax, the insurance, the principal, the interest. If you have HOA, you need to pay HOA. If you have, you're probably gonna have repair and maintenance as well. So the rental income minus the mortgage, the tax, the insurance, right, and the HOA fee if there's any, and the expenses such as like repair and maintenance. So whatever left from the rental income, that is your cash flow. But the rule number one is like you got to have the positive cash flow, right? Because it'll carry you over. It can help you to save. That is the positive cash flow. That's the rule number one. The second thing that that I like so much is appreciations. You know, and appreciation of the property. Some might say, you know what? Hey, during the market crash, your property drop in value. That's true. Over time, if you buy at the right price, not over market price, you buy at the right price, you get a good deal, you're very selective in your deal selections, right? You act the inflation will actually help you in appreciating your properties because every year the average of inflation is between 2 to 3% throughout the years. Okay, so you can say that the dollar's value that we're holding right now, every year it has going through inflation about 2 to 3%. So the property itself will increase in value almost about 2% roughly every year. Okay, that's the first one. That's natural appreciation. The second one is the forced appreciations. Forced appreciation, guys, hey, you can acquire property, maybe a bit of the fixer upper, maybe a bit outdated property in a good locations. You got it slightly below the market price because it's outdated, right? That's it. You got the property, you update, maybe you you update the kitchen, you update the bathroom, you bring it up to that, and then you force the appreciation of your property. For example, the one that maybe just worth like $300,000 right now, it become where the surrounding market is about $400,000, right? And you get the property because it's outdated, you got it about 320 or 340, and you put 20 or 30,000 into to update your properties, right? And you bring your property value up to around $400,000. um, Fair, you know, the same almost with the market value. That is we call forced appreciation. Of course, again, not everything, you have to be smart about it. You cannot overspend in your rehabs or your upgrade, right? Because sometimes certain upgrade may not bring, some inexperienced investor may end up spending too much in upgrading their properties and end up it doesn't get the best value for their dollars. But anyway, so there's two type of appreciation. There is natural appreciation, there's a forced appreciation. Okay, uh, the third one is actually principal pay down. So who do you think paying down the principal for you? Okay, all right. So earlier we talked about the cash flow. We talked about like the rental income that we got. We'll use it to pay, the PT. PT basically is principal, interest, taxes, insurance, right? We use it to pay the HOA if there's any. We also use it to pay some expenses like repair and maintenance. So the income that we got from the rental, we can use it to pay down the property. So indirectly, tenant is actually helping us to pay down the properties. Okay, let's say the property rent for like 2,800. Okay, and all your expenses is around like 2,200. All the expenses, including the mortgage, tax, insurance, HOA, and everything else. So part of that is going to be used to pay down your principal. Of course, you don't see this money right away because it's paying down. It's going to your equity. It become part of your equities, right? But hey, throughout the time, it's yours. You're paying down the equity. You build your equity using the renter money, right? So principal pay down. That's one of the things that you don't see very often. You don't see right away like the cash flow, but it's there. That's one of the benefits, right? Okay, the fourth one is tax benefits. This is what I like too, guys. Now, you may be thinking like, okay, hey, you're getting all this income from the rental, from the tenants, right? At the end of the year, you have to report tax. Yes, you do have to report tax, of course, but there are tax benefits that you can utilize, especially for investment properties, okay? So there are tax deductions such as like depreciations. Depreciation means that, if you use your properties and you use it to rent it away, right? So there will be a wear and tear from using your properties. And uh, the standard is like usually they'll use the value of the building. Let's say your property you acquired for like $400,000. The value of the building is like around $300,000, right? That $300,000 will be divided by 27 and a half years. And every year you can use that to offset your rental income. In addition to that, you also need to be aware that any expenses that you use for maintenance, you use for fix up the window or the plumbing or any expenses, repair and maintenance that you spend, you can be used as the tax deductions. So on paper, it may look like you break even, or maybe even you may look like you making loss, but in reality, it's like, you're getting all this rental cash flow into your pocket and you don't get tax for it. I mean, I'm not saying that you shouldn't pay any tax. I mean, but there is a way of people who invest in properties save, use the tax benefit and save them from paying a lot of tax on even like break even. Anyway, let's move on. Oh yeah, before that, make sure also you talk to your accountant, the professionals, how you can go about that, because I don't want you guys to be breaking the law. Okay? Yeah. All right. The the last one is number 5. Is passive income. You know, this is what I like about investment properties. Like, is it truly passive? If you think about it, I wouldn't say it's truly passive income because just to get the property itself, right? You need to find a good deal. You need to look for a good property that you want to invest in, or you can get a professional to help you finding the property that makes sense for rental, for investment properties, right? So it's not truly passive. You still have to do some of the work up front, right? And at the same time, you probably have to find some lender because use some leverage. You want to find a lender, that's another work that you have to do. Find the lender, select the lender, compares who's the lender can give you the best term and the rate, and if you truly like, hey, you like to be more involved in doing the investment property, just like me, like my rental property, most of them, I'm very involved. Basically, we find a deal, we get the lender, right, and we I even find my own renters, and after that make all the agreements with the renter, and when that is done, every month is kind of like semi passive income for me, because after that you just do most of the work up front. After that you just be collecting monthly rent. You just collecting just basically collecting monthly rent, and if there's anything that need to be maintained, need to be fixed up, the tenant usually will tell us or tell me, and we just call someone to go and fix it. That's all, as simple as that. Okay, but some people were like, okay, I'm not up to that, I'm too busy, I'm working as a lawyer, I got paid like $500 an hour, I don't want to spend any time dealing with tenant. Fine, you can still get the property management, right? You pay them what, depending on how you negotiate with them. They are very good with this. They can, you can help with finding the tenants, they can help with repair and maintenance, right? uh, they they're full of fees. Of course, there are always a trade-off right there. So guys, these are 5 top reasons why real estate is the best investment, and I just share with you guys. If you subscribe and turn on that notification for the next video, and let me know, put some comment below, let me know what you guys interested to know more. Yeah, and let me share with you guys this is just some of my investment property. Most of them making positive cash flow right now. But anyway, I'm gonna end this video right now. Hope you guys have a great day. Like, subscribe, thumbs up, and put some comment below. Tell me what you guys would like to know in the next video. Alright, ciao guys.